Stock futures are higher on Tuesday morning as traders put a successful month behind them and look ahead to Wednesday's Federal Reserve interest rate decision. Futures linked to the Dow Jones Industrial Average rose 104 points, or 0.32%. Futures linked to the S&P 500 and Nasdaq 100 were both up 0.35%. Monday's trading marked the end of the Dow's best month since 1976, ending up 13.95% as investors divested from technology and hedged their hopes in loyal companions like banks. The S&P 500 and Nasdaq Composite gained about 8% and 3.9%, respectively. Big Tech took the spotlight last week as the giant's shares tumbled on disappointing earnings, temporarily weighing on the Nasdaq. Meanwhile, strong results in earnings from Dow constituents such as Caterpillar and McDonald's sent the index on an upward trend during the week. Earnings season continues Tuesday with Uber, Pfizer and Fox before the bell and Advanced Micro Devices and Airbnb after. The Fed's November meeting also begins on Tuesday, with many market participants expecting a rate hike of 75 basis points. Many will look to the Fed's statement and Fed Chair Jerome Powell's question and answer section for clues as to policymakers' fight against inflation. We're pretty confident that the market participants seem to be pricing in a 75 basis point increase, said Jason Ray, founder of Zenith Wealth Partners. But looking ahead, how they're going to address it, and see if they change their language on inflation or the pace of rate increases in the future will be something that we keep a keen eye on. Investors will also be watching for economic releases on Tuesday, including September job vacancies and construction spending data, as well as the October ISM manufacturing report. The November Fed meeting starts tomorrow. Many market observers expect the central bank to continue its pattern of 75 basis point rate hikes. A 75 basis point rate hike on Wednesday should be fully expected, as the unemployment rate is still at a 50-year low and there is nothing to suggest that Jerome Powell will soften his stance on fighting inflation, said Danielle DiMartino Booth, chief strategist at Quill Intelligence. The stock market surge since the last Fed meeting in mid-September only strengthens Powell's case for continuing to tighten financial conditions. But many will be watching from the statement and question and answer segment with Powell, the chairman, to see just how hawkish the language is on inflation. Some expect future sessions to see lower rate hikes. Even more than Powell's direct 10-minute Jackson Hole message, Wednesday's message will be crucial for market expectations going forward, said Quincy Crosby, chief global strategist for LPL Financial. With the question and answer segment, Chairman Powell will need to convince traders and investors alike that the Fed is still resolutely determined to curtail inflation, but that it can be accomplished with a steady dose of lower rates. The gains continue to drive the biggest moves in after-hours trading. Avis Budget Group rose 2% after the budget car rental company reported earnings per share of $21.70, above expectations of $14.64 per share, according to Refinitiv. Stryker fell 5.5% after it reported missing the top line in its latest quarterly results. In terms of sales, the company slightly exceeded expectations.